The stock of the day is brought to you by IG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at IG.com.
And our stock of the day on this Friday is Life360. It's upgraded its full year guidance after reporting a 20% increase in second quarter revenue to $84.9 million US dollars. Total subscription revenue rose 25% year on year to $65.7 million US. However, there was a net loss of $11 million in the quarter, including IPO related costs of $5.8 million. So it is guiding for a full year loss of between 8 to 13 million US, but it expects to be on track for positive earnings in FY25. So just to put things in perspective, one of the best performers, if not the best, today. It's up by close to 19%. Okay, so even higher than the last time I looked. And shares have risen about 98% so far this year. Life360, as you know, debuted on the NASDAQ back in June. So I know that we've talked about Life360 before, Adam.
Yes.
But worth an update now that we've got updated figures from the company. So buy, hold, or sell?
Yeah, so it's interesting. It's definitely a buy. I've said that sort of last time I was on the show and talked about this one, and I think the biggest thing that you've got to look at this one is the 70 million subscriber base that this company has now, and that's just ridiculous. And they're just adding more and new customers on a regular basis as well. You did mention that revenue of 84.9 million, but it's also wise to mention that the market was looking for around about 84.6 million. So that was actually a beat on the revenue line. And I think that's overall, yes, it's looking for a small loss, but companies now or investors are looking for profitable tech businesses, and this certainly is one that is very much close to profitability with 70 million subscribers in there. That is an amazing amount of subscribers that they can pull some levers to get more revenue coming in the door, whether that's higher grading on the app or all those kinds of things. I use this app at home with my kids. Most people will have some kind of tracking, sad to say, but they do have some tracking apps and these kinds of things. For me, I think that this one will continue to go well and it will continue to beat numbers. So it's a buy from me.
Got it. So first half 24 result in line with revenue and a large beat at the earnings line. Stronger than expected operating cash flow coming through. Record quarterly net adds. Like there's not what is there not to like, if anything, in here?
Well, obviously it's expensive because it's a tech company. But when you're trying to establish a marketplace or the network effect, the cost of doing that is immense, and that's quite reasonable here. I looked at the rankings. I think it's like the top 5 in terms of social apps in the US, top 13 of apps overall. So it's cemented there as like the go-to marketplace. So as you said, there's nothing to not like here. And you look at the moves that they can add, like you can add auto insurance there, where if you're tracking your good driving habits, you can get lower premiums. So there's a lot of twists and turns from here, and they can just keep growing and keep adding to those revenue lines. So lots to like here. As always, you're paying up and overs for these companies. It's expensive, but it's just going to get more expensive.
So it's a buy. You're paying for quality.
Yep.
Double buy for today's edition of the Stock of the Day.
The stock of the day was brought to you by IG. Turn volatility into opportunity this US earnings season with extended trading hours on over 110 key US shares. Get started at IG.com.